Welcome everyone to the Node, brought to you by DeFi University and DeFi Crypto and Airdrops. I am Mike, aka Veteran Crypto, and with me as always is David from DeFi University. How's it going, brother?
Outstanding, Mike. Always, man. Always doing great today.
It's nice.
Big bounce, man. You see the bounce?
I did see a little bit of the bounce. Let me really quick introduce our socials, and we're going to jump right into it. So if you haven't already, I invite you to come on over to the Node. We are, obviously currently live on X on our channel over there. But if you could give it a follow, we'd appreciate it. We just started it, and we're getting close to breaking 100 followers. So if you could help us out, again, greatly appreciate it. But we are here on Monday through Friday, 9 a.m. to 11 a.m. Pacific, and noon to 2 on the East Coast. So basically what we focus on here is investing news, interviews that have to do mostly with a crypto and DeFi, but also just TradFi investing, depending on who we have on, and also DeFi education, crypto education and investing education, to include technical analysis, brought to you by DeFi University and David specifically. So with that being said, let's go ahead and jump on into the news, and then we'll definitely get into some charts with you. So the news that we got today, let me actually refresh my news feed real quick. I want to make sure that everything's up to date. In the news. I know that the big news was Kraken. Kraken got approval to use the Fed network to, basically to move money, which is a first. It is the first. So this is the narrative that that Ripple was going for. That Ripple XRP, the XRPL was going for, as far as cross-border payments and the movement of value and all of those sorts of things. So this is very interesting. Kraken kind of came out of left field on this one. I knew that they had submitted to be a bank, and were successful with that. But as far as being the first to get that Fed approval, that kind of came out of nowhere. I mean, is that something that you were, kind of had your finger on the pulse of, David?
No, not really, Mike. I'm actually looking it up right now as we speak. It looks like today, March 4th, Kraken's banking unit, Kraken Financial, became the first crypto native firm to receive a Fed master account.
Yep.
Yes, master. I have the account now, master.
That's exactly what it is, though. The Fed is a very controversial organization. If anybody that's read the book, The Creature of Jekyll Island, will get a full understanding. And there's a lot of conspiracy theories that circle around it, with the Titanic and a lot of the people that were on the Titanic that kind of opposed a Fed. The Fed is it's a private organization. It is not the name suggests that it would be like a federal entity, but it actually isn't. So maybe you can expound a little bit on that, David.
Yeah, it's basically like an unconstitutional fourth branch of government.
Yes,
that's basically what it is.
That's a great summary.
Yeah, the Constitution doesn't provide for the creation of a banking cartel outside of the three branches of government. So yeah, it was created in 1913 by 12 guys on an island called Jekyll Island, right? And the only guys who would have, voted against something like that, they all died on the Titanic.
Yeah, coincidence. It's just a total coincidence. They just happened to all be on the fucking Titanic.
Right. And, JP Morgan was also on the Titanic. And then like a couple of hours before it was due to depart, he gets off the boat. But John Jacob Astor and a couple of other guys that were really important, who were not for the creation of a Federal Reserve Bank, they died on the Titanic. So what does this news mean for Kraken? Looks like,
Well, the summary, I'll read the summary that I have. So Kraken Financial, a Wyoming chartered bank, gained a limited purpose Fed master account from Kansas City Fed, enabling direct Fed wire access for faster, cheaper fiat settlements without intermediaries. Again, This is what the XRPL was trying to do, or Ripple was trying to do with the XRPL. Phased rollout starts institutional, historic for reducing friction and counterparty risk in crypto on-off ramps, hailed as a watershed for regulated integration. So go ahead and expound on that. That's the summary that I have.
Yeah, so all I'm thinking here is, this fiat system, this treasury system. Mike, the more that I build on Bitcoin Lightning
Mhm.
rails, I just, I mean, look, it's obviously a good thing that Kraken, is able to now settle payments more quickly. But building on Bitcoin rails tells me that, the real problem with our banking infrastructure is, number one, it's not just that it's too slow because it was created in 1970 or before,
Mhm.
but it's also the fact that it's denominated in dollars at all. Like the entire dollar fiat system is broken. And that's why in 1970, one man could support his household, two children, a wife, a
Mhm.
dog, and a picket fence, and two cars, and go on vacation off of
Yeah,
one salary
and have money left over.
and have money left over. And that's not true anymore and hasn't been true for a long time. And it's directly the fault of the Fed. Like the system that we're talking about here is the reason why people are struggling right now.
Yeah.
And I think Bitcoin fixes that, but Bitcoin needs more developers to build on top of it. The dApps don't exist on Bitcoin yet. So, but when I take a look at the fine print for this limited account, so it's a 1 year initial duration. So they're getting like a limited account for 1 year.
Yeah.
They call it a skinny account. So it's a limited purpose that they call them skinnies, I guess. So even these evil banksters have like nicknames for the accounts that they have.
Yeah.
So a limited purpose skinny account. And Kraken will not earn interest on reserves held at the Fed. Unlike,
Oh.
yeah,
Okay.
so they're
All
getting
right.
kind of screwed there a little bit,
Yeah.
because all the big boys, they can just put their reserves at a window at the Fed and earn whatever the discount rate is. And so yeah, so no access to the Fed's discount window or emergency lending. So basically, this looks like just a way for Kraken to settle payments more quickly without
Yeah.
having to go through intermediary banks. That's
Well,
that's what it looks like.
and it seems like it's more geared toward on and off ramps, of fiat, in and out of crypto is kind of what I was reading.
Yeah,
So,
it looks like, Mike, that also like there have been banks in like legislative battles with the Fed for years trying to get this type of access.
mhm.
Like Custodia Bank, I guess,
Okay, I've heard
was
of it.
trying to get, yeah. So this Custodia Bank is still fighting the Fed trying to get the same type of access. Um, and it looks like there's something called the Wyoming Special Purpose Depository Institution Framework,
Hmm.
which under that framework, um, Kraken is saying that Kraken's basically saying that the Fed should soften its stance to comply with this special purpose framework. So, I mean, look, it's a good thing to see a crypto institution get access to TradFi banking rails in the same way that other banks have. Um, but as far as adoption, like that's the thing that I think really matters the most, Mike, is adoption. Like, is this going to drive more adoption? Maybe. I certainly hope so. I
I,
certainly hope so.
I see it more as a unlocking or a cracking of the door, of allowing these crypto rails and these centralized exchanges and crypto based institutions being allowed into the legacy system. So that's kind of more what I see this as, not this massive news for Kraken per se, but more of progress towards the full integration of DeFi and TradFi. That's what
Yeah.
I see.
Yeah, me too. Me too. And I think that basically we're going to see all of the TradFi rails get recreated on
Mhm.
top of digital rails. And whether that means, a closed walled garden like Canton, or that means a public ledger like Ethereum, or if that means, maybe something else. It's a big upgrade, that's for sure.
Absolutely. Absolutely. So next headline, Trump privately meets Coinbase CEO Brian Armstrong yesterday before backing crypto against banks. The summary, President Trump has held closed door White House meetings with Coinbase CEO Brian Armstrong on Tuesday, per multiple sources. Hours later, Trump posted on Truth Social urging banks to make a good deal with the crypto industry, to advance stalled digital asset legislation, criticizing them for undermining laws like the Genius Act, the Stablecoin Act, by opposing stablecoin yield rewards. This is why the banks are pushing back so hard on this new piece of legislation. Was it the Clarity Act? Um, and so he's criticizing them and saying that, which is echoing Coinbase's position. Because Coinbase, of course, they have historically offered yield on USDC if you deposit, and hold your USDC on Coinbase. And then we all know that there's in DeFi, if you're in DeFi, there is multiple places that you can go to earn yield on your USDC or USDT or other stable coins. So the banks don't like this. Reason being is historically they're the place that people put their money, and then they used fractional banking to lend out your liquidity multiple times. And fractional means that, like, if for every $1, I think that they can lend it out like 9 times. So basically they can multiply your money 9 times, lend it out to a bunch of different people, and earn 6, 7, 8, 9% or whatever off of
So,
your money and give you like
so
0.01%.
bro, it can actually be up to 40
Holy
x
shit.
40x.
Really?
Yeah.
I
So
did
like,
not.
yeah, man. I mean, so what you said, that was like the baby end of the pool. Like,
Yeah.
that's like the shallow end, the
Yeah.
9x. But yeah, no, some of these banks can run that leverage up to 40x. And it's a way for them to create dollars. They create credit
It's
in that
it,
way.
it is. It's a roundabout way to print more money. Like they don't
Right.
print enough already.
Right. Yeah. It's just a way, it's almost like a shadow banking institution, kind of,
Yeah.
sort of.
Well,
Yeah.
it's like a shadow Fed.
Yeah, it kind of is. All of these really large, they're referred to as bulge bracket banks.
Mhm.
Think JP Morgan and Citibank and B of A and Wells Fargo, all the best institutions, those four, they accept customer deposits. Those deposits are liabilities on their balance sheets, though. They've got to lend out those deposits. And in the process, they end up creating credit. They create a lot of credit.
Yeah.
And so it looks like there's a question here.
Yeah,
Um,
Jeff, this is one of the questions that I was asking you. You were busy last night when we were live, but this is one of the questions that we were wanting to ask you live on the show.
yeah, so how would neobanks be impacted if the current legislation were to pass? So I'm assuming that what Jeff means by the current legislation is that iteration of it that we saw not get voted on a couple of weeks ago, that Clarity Act.
Yes, that's what he
That's
means.
it. Yeah. Okay. So basically, I just want to make sure that I'm clear here. So that Clarity Act that did not get voted on, the reason it didn't get voted on is because the banks were basically going to screw over like every crypto institution by
Yes.
not allowing them to pay interest, right, on deposits. That was basically it. So how would that version of that legislation impact neobanks? Okay. Well, let's talk about like EtherFi for a second. So the way that EtherFi works, they're basically a big Ethereum bank.
Yeah.
That's what they are, and they've got a couple of different ways that they generate revenue, but they've also got a lot of VC money. So if I'm a customer at EtherFi and I make a deposit there, I don't expect to earn yield on my deposit. What I do instead is I immediately take that deposit and I put it in some type of yield bearing product, like a vault that contains Pendle PT tokens.
Yeah.
And so those PT tokens in that vault, plus whatever USDC, USDT single lending stuff they're doing in that vault, that pays some yield. But that yield is generated via real economic activity. It's not just like, treasury yield, which is what the banks were fighting with crypto institutions over in that Clarity Act legislation. They're fighting over the treasury yield because that's a big source of their net interest margins, and they don't want that to go away. So for me, over at EtherFi, if I make a deposit and then I transfer that deposit into a vault that is paying me 6%, that 6% yield has nothing to do with that Clarity Act legislation. So I would continue to earn that 6% on my checking account. And then when I go to spend against it, what I actually do is I borrow against my checking account.
Because you don't have to pay taxes on that.
Well, and also it creates a nice little net interest margin for me.
Well, so, speak to a certified accountant. I'm not a tax advisor.
Yeah.
But no, it really is. It's a way that Taylor, my brother, that's usually on the Monday show, and Jeff, Texas Jeff, it's they're the ones that taught me that, is that you don't pay taxes on debt. So if you have Bitcoin, if you have different assets, your home, whatever your investments are, if you can take out a loan against it, it's a way to access that liquidity. It's what the rich do. It's what the wealthy do. They live off debt. They take loans out on their assets so they don't incur that taxable event and pay capital gains. So it's a way for them to access that liquidity, invest in other things, grow their wealth, live their lifestyle without paying, massive, capital gains, either short or long-term capital gains.
Yeah. And so I live my life, off of that EtherFi account, or I've got several of them now, but, all I do is take dollar deposits and put them into yield bearing products. And so I see in the chat there, not Scoot Boy is asking about, isn't Liquid USD on EtherFi a yield bearing token? And so it's not quite a yield bearing token, not quite. So the token that is minted when you deposit into that Liquid USD vault, and there are two of them on EtherFi now, when you deposit into either of those vaults, a token is minted. You get that token in your wallet on EtherFi, and then you can borrow against it. So it's not exactly a token that you're swapping into. It's a vault that you're swapping into that then mints a token. So not quite, pretty close though. But yeah, man, I mean, look, all I do is borrow against myself when I spend or buy anything. That's literally exactly what I do.
Mm-hmm.
Yeah.
Well, perfect. All right. So next headline is Bitcoin surges to 72,000 to 73,000 plus 1 month high amid policy tailwinds. Summary. Bitcoin climbs 6 to 7% to briefly exceed 72,000 to 73,000, driven by risk appetite rebound, haven demand, and positive crypto policy signals, including the Trump-Armstrong meeting. Then on-chain supply above 72K suggests potential quick move to 80K. Potential, not guaranteed. ETF inflows are strong. Crypto stocks, Coin, which is Coinbase, is up 12 to 14%. Master, MSTR, which is a Sailor's stock for a strategy, is up 9%, leading gains. So what are you seeing as far as those?
Dude, look, I mean, I'm short. Okay. Like I'm short, and I'm down a couple percentage points today on my short futures portfolio, but I'm short a bunch of shitters. So like all these altcoins, I'm short like a dozen altcoins, and I'm not using any leverage, leverage. Yeah. And I'm trading options. So that's what I'm doing. And the options portfolio, moved barely today. So even with that massive move, I'm just trading synthetics and I'm short futures. And so what do I think of the move? Well, I think that it is a bear market rally. That's what I think. And when I take a look,
you've been saying this for a while. You've been saying that March, that traditionally there's a bounce, and then and then we're going to probably make lower highs, and get a pullback and make lower highs eventually.
And you know what? I mean, Bitcoin is at or very near to resistance now as we speak. And I mean, look, up several $1,000s in a session, plus nearly 5K, $5,000 this session. That's a big, big move, man. Bitcoin doesn't really put in many, plus or minus $5,000 candles. That's a pretty big day today. So it's sitting, resistance is at 74 and a half. So that's where resistance comes in for BTC. That's also down level. And if we take a look at last cycle, well, Bitcoin rallied up to its horizontal resistance and then failed. And that's where we got the breakdown below the 200-week moving average. So it's really good to see this type of bounce and look, I can totally be wrong. I'm just looking at markets here, and I don't have a crystal ball. I wish I did, but
no, don't we all?
Yeah, so I see Tom Lee on CNBC, one of the Uber bulls, coming out saying this is what a bottom looks like. Like, come on, bro, really? I don't think this is what a bottom looks like necessarily. But what I think is that Bitcoin is at resistance, and if it gets rejected at resistance at 74 and a half, or if it doesn't even get up there, that's only 1,000 points higher, maybe 1,500 points higher from where it's currently trading. It's basically sitting at resistance now. And Benjamin Cowan put out a great piece of research the other night where he was talking about, Bitcoin in March of the midterm year in the Bitcoin bear market tends to put in some type of a bounce. And that bounce simply puts in a lower high. That is a bear market rally. And then we see that 200-week moving average get tested or broken. And so that's what I expect to happen. Nothing has changed in my thesis. And all I'm doing right now, Mike, is just managing an options position and sitting on my hands for the most part, because I want to be short. Like, that's the thing. My expectation is that throughout the rest of this year and into October and November, we see more downside out of digital assets. And so it's great to see the bounce because, to me, that's actually a healthy sign. That's a good thing, a really good thing. But I don't agree with Tom Lee that, the bottom is in for Bitcoin this bear cycle. I think it's premature. I think that there's probably another 6 months left on the downside for BTC.
All right. So in DeFi news, our next headline is Aave governance drama. We reported this last night on Crypto and Chill. A major group, ACI, exits 26 to 27 billion of the protocol. Summary: Aave Chain or Chan Initiative ACI is shutting down amid disputes with Aave Labs over transparency, self-voting, and budgets, escalating tensions in a top DeFi lending platform. So those that don't understand this relationship, so what they're upset about is that there was a DAO initiative that was put forward for vote, and it was done over a weekend, and Aave Labs tipped the vote in their favor. They're the ones that put it in. And maybe, David, you can give us some details on what that initiative was. But that upset ACI. And so it's been going on for a couple of weeks now. And so ACI has decided to shut down over it because the way that they see it is it negates the DAO if Aave Labs is able to swing the vote to whatever it is that they want whenever they want. So the point of a DAO is that it's supposed to be a decentralized governance where the holders of the token, the governance token, are able to vote relative to their token holdings. The problem is that Aave Labs holds a large amount of the token and able to swing the vote in their favor. Again, gets rid of the whole reason for having a DAO. So maybe you can give a little more clarity on this, David.
Yeah, so it looks like there's 4 things going on here. So number one, there's been this governance civil war between independent service providers like ACI, which is that Chan initiative, and Aave Labs. So they've been in this governance civil war, Mike, just like you were saying. And so here's the Aave will win proposal. Here's the first of the four items. So it looks like Aave Labs pushed through a massive funding request totaling $42.5 million in stablecoins and 75,000 Aave tokens. And ACI, that's the Chan initiative, opposed the size and structure of this package, but they didn't have the votes to be able to stop it. Okay, so the Aave founder, Stani Kulikov, like, look, man, if I had built Aave and I held all the Aave tokens and I could guide governance, you better believe that I wouldn't let like ACI mess with me, man, especially over $42 million. Like, no way. Um, so
Well, I mean,
here's
but then why have a DAO? I mean, if you want to have the power, then why? The DAO is just lipstick on a pig.
exactly like, but he built the thing,
No, I get
so
that. I get
yeah.
that. But if he built it, then why did he fucking make it a DAO?
For the illusion of decentralization, I guess. Who
Okay,
knows?
that's fair. I'll keep going.
Yeah. Yeah. So here's the second thing. So
All right.
allegations of self-voting. So saying that Mark Zeller, who's the guy leading ACI, alleged that the vote was decided by labs. So Aave Labs linked addresses voting on their own budget. Well, no shit. I mean, so this guy Stani probably has a bazillion addresses that all hold Aave tokens that he uses to vote in the way that he wants those tokens to vote. So yeah, the guy over at ACI, Mark Zeller, is calling it undisclosed voting power. So yeah, that's probably true. And then you got the departure of BGD Labs. So this is another one of those like ACI firms. So ACI's exit followed closely on the heels of BGD Labs. So I guess that was the protocol's primary engineering team, which quit in February. Oh, great. So Aave's engineering team quit last month. I didn't know that. And it says BGD Labs left after disagreements over the direction of Aave V4, which they viewed as unproven compared to the highly successful V3. Oh, well, that's not good. Okay, that's really good to know. Maybe I might actually pull money from Aave, man. Now that I know that their entire development team
Airdrome's starting to look kind of awesome right now.
Oh, dude, yeah. No, I'll move over to Euler, man. And then we got centralization concerns. So Zeller stated that the current governance process is no longer decentralized. Well, of course it's not. So basically, like, this guy Zeller over at ACI, he created this entire process for incentivizing liquidity providers on Aave, and realized that he didn't have the voting power that he thought he had, and he left. And then because the guy who controls the voting power controls the direction of the protocol, so Stani looks like he's the one telling everyone else this is the direction in which we're rowing. And it looks like his entire engineering team didn't agree with him, so they left. That's not good. Oh, yeah. Man, I hope that things work out for Aave, because some type of real a real problem at Aave, man, during a bear cycle would be bad. That would be really bad. So we'll see.
Well, and all this infighting is not good, because it makes people nervous. Like, it just made you nervous. And if everyone starts pulling their liquidity, then
liquidity.
Liquidity.
Yeah.
And so I went to bubblemaps.io, and this is the Aave token. So the larger the bubble, the larger the wallet holding. And so you can see the number one is this staked Aave, or Aave staked Aave, and I'm guessing, and it's a super node, I'm guessing that this is Aave Labs. Being
possibly
that it's the largest holder.
Yeah, it probably is.
And then you got Binance. Man. Binance is number 3. So yeah, I mean, this is really important to understand, because if it's a DAO, the whole purpose of a DAO, like we were saying before, is I don't know why my video is getting so choppy. Um, is that it's supposed to be decentralized. It's supposed to allow people to vote on these things. Let me go ahead and take over for a second. I'm going to see if I can mess with my settings a bit.
Okay, you want me to just like run through, and there's something specific about the audio or video that you want me to do here, or
No. I just go ahead and actually, you know what? Let's move on to the next news, and then I'll do that. So the next headline is DeFi TVL has been stable for quite some time. Yield tokens gain in the rebound. So that's what I had up here. Let me pull up DeFi Llama. So I have up here on the chart from the beginning of November of last year up until now. So what we got November, December, January, February. So the last like 4 months, we TVL and DeFi has been relatively stable, and I can drag it back, and you can see that. I mean, even well past that. I mean, relatively speaking, DeFi TVL has been pretty flat. I mean, we got a little bit of a pump in October, and then obviously this is the dump after October 10th. Because right here is October 8th is when it peaked, and then the 10th is when we started this downward slide, and then we slid a little bit further end of January. But for the most part, you can see that the TVL has been relatively stable, which is bullish, I think, for DeFi. It means that people are still very confident in DeFi. And then, of course, I mean, if we pull up RWA.xyz, I mean, that's just going up and to the right, as far as TVL. I mean,
right.
and it just consistently. And I'll bring that up while you take over, David. What are your thoughts on this as far as the stability?
Yeah, so the reason for the stability, I think, is exactly what you just touched on, Mike. The RWAs. The RWAs are creating like a floor underneath TVL, and so those RWAs are basically treasuries. Okay, so like it's treasuries, it's tokenized gold, it's some tokenized real estate. So it's basically like a safe haven effect. The RWAs have created a floor underneath DeFi TVL. So you've got the entire RWA sector. If we just hop on over here to RWA.xyz, what's the total TVL looking like?
It's on. I have it on screen.
Yeah, 27 billion. Mm-hmm. So hey, that's a lot of TVL that's not going anywhere.
Well, and it's up 11% in the past 30 days.
Yep, and it's going to continue to grow. It's going to just continue to grow. So that creates like a floor underneath DeFi TVL, because take a look at the chains. The majority of it's on Ethereum. That's 15 billion. Actually, no. So is it the majority is on? Yeah, the majority is on Ethereum.
It depends. So they delineated this recently whenever Canton popped up, because I think there's an important distinction between distributed and represented. So in a nutshell, distributed means that actual value is being moved on chain. So the definition it gives is for distributed, where Ethereum is the king, is RWA tokens using the blockchain as a distribution layer, enabling on-chain investors to subscribe, hold, and manage assets directly through their own wallets or custodians. Represented is RWA tokens using the blockchain as a record-keeping layer, enhancing transparency, reconciliation, and operational efficiency without enabling on-chain investor transfer or distribution. And that's where Canton is king.
Canton. Yeah, so tell us a little bit about Canton, because that isn't included in DeFi TVL at all.
And I think that has a lot to do with that it is more of a net. And I could be off on this, but my understanding is that it is a network for institutions and banks to connect siloed private networks. So it's configurable to where it can be fully public, it can be fully private, depending on the user. They can configure it, and it's purpose built. Shaul Kafir, and I talked to him about coming back on with me and you because I think that you could ask some very pointed questions, some very high level questions of him, and I think it would be a great interview. Me and Drew did one, and I learned a ton. But in a nutshell, you have siloed networks such as banks, Wells Fargo, Chase, all these different institutions, and they don't want anyone other than those that are authorized, within their organization to see balances and transfers and all that sensitive data. And so they wanted a network that brought them, the upgrade of coming onto blockchain rails, but not be open. Like Bitcoin and most other chains out there, everything is public. Everyone can see wallets, everyone can see transfers. If you know who owns what wallet, you know exactly what they're doing with their money. And so those of us that are in DeFi and investing love that because we can see what big money's doing. And you can copy trade and do a lot of different stuff with that. However, banks and institutions and governments hate that. They love being able to move in the shadows and say one thing, do another. We watch it with Jamie Dimon. We watch it with all of them going on news outlets, and Bitcoin's a pet rock, and he'll fire anybody in his organization that.
And then what does he do?
and then all the while he's saying that publicly, he's buying Bitcoin. So basically, that's what Canton is it connects these siloed private networks and allows them to move value and allows them to move information, and they can configure it to where only regulatory bodies, only the sender and the receiver can see the information. So that's more what Canton is, whereas Ethereum is just open and permissionless. It allows people to actually move, actually move value in a way that isn't that you can use your own wallet. I think that's the key. Where Ethereum, like if I want to send David something, I can send it from my wallet to his wallet. With Canton, it's more of I'm sending it from my bank to his bank, and they're the custodians, not me. Does that make sense?
It makes perfect sense. It makes perfect sense. That's kind of similar to how client dApps on Lightning work. So a custodial client dApp on Lightning works in kind of sort of a similar way. Similar way. Yeah.
All right. So that's my understanding of Canton. And it's a very unique chain. And I'm always, I'm still learning. I'm still reading up on it. But I mean, you can see, in the past 30 days, it's grown, over 75%. The RWA count currently sits at over 7,000. So, not to, it's kind of, apples and oranges, but, Ethereum is sitting at about 500 RWAs and at about 15.7 billion, and Canton's at 313 billion. So, I mean, it really depends on the use case, though. So
I'm pretty sure. Yeah. So Mike, the use case isn't Canton over the next 24 months. I'm pretty sure that JP Morgan Chase is planning to move like 15% of their repo business onto digital rails on Canton. That's a big deal.
Well, that is the majority of what's on it now. So if you look here, this Broadridge DLR, that's what this is the majority of what's on Canton currently, that's registered on Canton currently is this repo market. And the daily turnover is $313 billion of repo. And those that don't understand what repo is that short-term loans, institutional short-term loans. And so, yeah, I mean, this is massive, and this use case is massive just because of the sheer volume of money that is moved on a daily basis. This is why Canton just broke over $3 million in fees that it generates per day
Yeah.
that is burnt, and that leads to the burn mint ratio. Basically getting to a point to where the an equal amount is burnt than is minted by those that are building and utilizing the network. So there's incentives for those people that are utilizing and building on the network, and we're getting closer. We're not there yet. We're getting closer to the point to where that is an equal amount. That's what they call equilibrium. And if the network usage continues to increase, then potentially, not guaranteed, but potentially with that increase, it becomes more and more deflationary to where more tokens are being burnt than are being minted, which potentially, not guaranteed, could mean price go up because of less supply. Again,
Yeah.
potentially.
Yeah. So um, the thing about Canton today is that with everything else up big, Canton is down. Kind of interesting to see that. Interesting to see that.
Yes, but kind of contrary to that is while everything else was dumping, it was
I
going
know.
up and stable.
Exactly. Yeah.
So
Yeah.
it's yeah, you're 100% right though. It seems like it moves on its own. You
And
know,
so Mike, there are very few digital asset tokens that do that. Very, very few. You know,
yes.
you've got like maybe you could put Tron in that bucket.
Okay. Okay.
TRX. But aside from that, man, I can't think of another token that actually trades that way, where it's less correlated or maybe even uncorrelated to other digital assets. Canton is like the only one.
Yeah.
All the rest of them, they basically follow Bitcoin.
I
So,
mean, this is since its launch. I mean, you go back to November of 2025.
hey, Mike, I got to grab some more coffee, man. I'll be
Oh yeah,
right
no
back.
worries. I mean, initially, I mean, when everything else was going down, it went down, and then it started getting a lot of traction, a lot of attention, a lot of bullish news, and people started buying it, and it just kind of bounced around a little bit and found this level, and pretty much since what January 21st, it's just been trending tightly in this range while everything else has been volatile, dumping and volatile. So very interesting. Again, I'm kind of pointing out the obvious, but again, and if you look at the volumes, down below here, it's just same thing, very stable, rock solid. Not a lot of dips or pumps or anything like that. It's definitely nowhere near a stable coin, but it is a very stable price, which I personally love because I see DeFi opportunities potentially coming for this. And I talked to Shaw about that during the interview. And when we have him on again, I really want to dive deeper into this because the only way that I've found to earn on Canton so far has been that Braun wallet. And those rewards have been steadily decreasing. And so I am very eager to find somewhere else to put my Kent to earn. So anyway, yeah.
Covfefe.
So anti-immigrant says everything slowly ends up following Bitcoin. I don't think that is always the case. The majority, yes, I would agree, but I don't think that. I think that most that kind of move on their own continue to move on their own. And and I think Canton, with its use case and its tokenomics, um, it's I think that it is going to, and its institutional focus, because most of the people that are earning Canton are institutions. They're running their own nodes to generate Canton so that they can pay their own fees. So basically, I don't know if it'd be called an arbitrage, but no, it would be an arbitrage. But they're earning on one end so they can pay the fees on the other. So it's almost like a net neutral. They're trying to mitigate the cost of using the network.
So, Mike, what do you have to do to run a node on Canton Network? How do you do that? That sounds pretty interesting.
I would love to do that. If it's something you're interested in, I would love to look into doing that with you.
I think that sounds great, man. I'd love to do something like that. I already run 3 Bitcoin nodes. Me and DeFi Don were able to set that up over the weekend, man.
Oh,
So
nice.
yes, we got a couple of Bitcoin nodes running, but the Bitcoin nodes allow you to build on top of Bitcoin. You
Yeah.
need to be a node operator to build on Bitcoin. But dude,
Well,
like I'd love to.
and that's good because I mean
Yeah.
you're helping secure the network.
Yeah, exactly. And also helping to secure the Lightning Network because that Lightning Network, man, that is something special. Really, really cool. And the unit of account is not the dollar, it's the Satoshi, sats.
That
That's the unit
reminds
of
me.
account.
That reminds me. It's been a while since and I'm starting to
Oh,
forget.
oh man.
I'm starting to forget how fast it is to send me satoshis.
Here, Mike, I can send you some sats, man. Let me just hold on, dude. I got all these sats over here, bro.
It's really hard for me to retain this information
Yeah.
when I'm not getting my regular sats. So I'm just playing. I'm just playing.
Yeah. No, let me just see here. I got to open up my custodial wallet. I'm looking for
Well, let's show everybody how fast it is. So I'll open my wallet and you can show everybody how. All right, so here's my wallet of Satoshi.
there you go. So the reason why
Oh,
Wallet of Satoshi works so
oh,
well
dude.
is because it's custodial. See, this is a Lightning wallet. This I don't know if anyone can see this. You can't see it because of my background thing. But Wallet of Satoshi is a custodial Bitcoin Lightning wallet. And what it allows you to do, if you run your own nodes, you can then create your own clients that you run on top of your own nodes. So this wallet is a client dApp built on top of Lightning Bitcoin nodes. So if you can run your own nodes, then you can build any type of dApp you can dream up, anything you can dream up. You can build it on top of Lightning using Nostr. And so you got a handful of Mike. If you send me an address, man, I want everyone to be able to see this process. It's pretty darn cool.
See,
Um,
like what kind of address?
the Lightning address. Send me your Lightning address, and
Oh, the
I'll
wallet.
send.
Wallet
Yeah,
of
I'll send you some Sats, and then everyone can see just like how instantaneous these payments are on Lightning.
Satoshi.
Um,
I'll
but
text it to
yeah, basically the way that this works is you first need liquidity. That's the thing. And in order to provide liquidity to the network, you have to open up these Lightning channels. But you can't do that unless you're operating a node. And if you're not operating a node, then you've got to rely on either, something like this wallet of Satoshi, or maybe you want to use something like the product from Async, their Phoenix wallet. But yeah, so now I've got your thing. Oh, look at that! You've got some Satoshis,
you.
Mike.
I got 81 cents of Satoshis.
You got some
I'm rich.
Satoshis.
I'm
You got
rich.
you got all the Satoshis, man. Well, let me just see. Let me see if I can help you out a little bit.
All right.
Okay, so
We'll
a
see how.
lone oak.
Let us know when you hit send, and we'll.
Okay, so here I'm hitting send right now. Let me just see. Okay, let's see how quick this is. Send, and on my end you can't hardly see it. It just
Yes.
completed on my end. Just completed.
All right.
And there you go. You got it.
There we
Boom.
go.
Look at
Boom.
that. How
All
fast is that? That's so cool, right?
No, it honestly is because I mean that was one of the issues with Bitcoin is
Oh,
that
dude,
it
it's
was just so
amazing.
slow, and that's why
Yeah.
somebody came up with the Lightning Network is because it was ridiculous to think that Bitcoin was going to be used. I mean, realistically, for any kind of day to day payments or peer to peer transfers, of any kind of speed, and so they made the Lightning Network that enabled fast transactions, and then it sounds like they somebody came up with Nostr to further boost the functionality.
Yeah. So Nostr is super cool, man. It's basically a messaging protocol. kind of like email built on top of the internet. And the internet in this case would be the Lightning Network itself.
Mm.
And not Scoot Boy is asking for that seed phrase, huh?
You want all 81 cents of my satoshis over my over 88 my 88 cents of satoshis over my dead body.
That's right. That's right.
You're not getting my
So
you're not getting my dollar of satoshis.
I mean, so the thing about Lightning, man, is you've got all of these different, most of them, I think almost all of them, open source protocols built on top of it now. So the Lightning Network itself, that's the rails.
Yeah.
And then you've got, all the node service providers. You've got this emerging industry of liquidity service providers on Lightning because you need channels back and forth, inbound and outbound liquidity to be able to operate on Lightning. Otherwise, you can't do anything. And then when it comes to Nostr, that's the messaging protocol. So in order to be able to send messages between these nodes, you need a standardized way to do that. That's what Nostr is. And so you've got all of these different protocols together, and they've all got abbreviations. And so I'm going to give you a couple of abbreviations for protocols. These are all real, and I'm building using all of them. NIPS and nuts and LUDs and bolts. Nips and nuts, nips and nuts and LUDs and bolts.
Huh?
Yeah, man. So
this is
Nostr,
starting to turn into a whole other kind of show.
those are protocol protocol abbreviations on Lightning. And you need to be able to use all of these things together to build cool stuff because there's no smart contracts on Lightning. So it's just a matter of like using the messaging protocols together in a really complex way to get done what a smart contract would do. But here's the beauty of it all. Because there are no smart contracts, as long as you keep your keys safe, it's very, very unlikely that you would lose funds. So that's, dissimilar to what you see on Ethereum chains where a smart contract exploit and you could lose everything. But on Lightning, as long as you keep your keys safe and you don't use custodial services, or if you do use custodial services, you just understand that risk. Well, then on Lightning, man, when you own your keys, you own your assets. On Ethereum, if you deposit onto a dApp, you don't necessarily own it, man. That smart contract is what owns it. And that smart contract, if it gets exploited, you could lose everything. So,
absolutely.
Yeah.
Well, we got about 7 minutes left in our news portion. So let's, last traditional finance. And then I pulled up how to start a Canton node. And maybe we'll dive into that a little bit during our educational portion. So the last headline: stocks rebound, oil eases on Iran negotiation signals. Indexes up modestly. S&P is up 0.3% to 0.5%. Oil paring gains. Brent is up to $80 to $81 after Trump's tanker support pledges an indirect Iran-U.S. contact reports. So there was news that Trump, because I think it was last night we were talking about it, or maybe yesterday me and you were talking about it, but one of the hurdles right now with the Iran conflict is the insurance to get through the Strait of Hormuz, which is this. The insurance to get through. So here's Iran up here, and this is the strait, and, the choke point. So you have Kuwait, you have Iraq, you have Saudi Arabia, you have the UAE, you have Bahrain, you have Qatar, you have all of these oil producing nations that are trying to get their oil out to the rest of the world. But Iran can control this choke point and historically has. Because of this conflict, they are saying that they're going to basically blow up anybody that tries to come through there. And so now you have all of these tankers that are sitting off, like all these orange arrows and orange dots are all tankers. If it's an arrow, they're moving. If it's a dot, they're stationary. So this is everybody's at a standstill. They're all choked out down here. They're sitting out here, waiting until it's safe to go through, because the insurance it makes it cost prohibitive to take the chance. Because if they get hit, they're going to lose more money than the insurance is going to pay. So Trump is claiming that he is going to offer, the U.S. is going to offer enough insurance to get the oil moving again, because about 30% of the world's oil supply comes through this area, which is a very large portion, and that's what's affecting these crude oil prices, and and natural gas, and all these different different petroleum products, basically. So that's kind of what's going on here, and what's affecting a lot of the traditional markets. So what's your thoughts on that before we move on to our educational portion?
Sure. Yeah. So, number one, it's about time that Iran was dealt with.
Yeah.
Like that Islamic regime was the supporter of terrorism around the world, man. So, like, it's really like it should have been done a long time ago, taking out those Islamic clerics there. And I'm very happy that Trump finally stood up and said enough is enough, and we're gonna take them out. As far as the choke point here, well, I'm pretty sure that the U.S. and Israel together have performed several thousand operations over the last couple of days in Iran to destroy all of their weapons making capability, all of those drones, all those missile launching pads. So, pretty soon, whatever's left of the IRGC, they'll be able to put out statements saying, hey, we're going to do something or other in the Strait of Hormuz, but they won't have the fangs to be able to actually do it. And if they try,
it'll be like when I was in Iraq on my first deployment, when they're basically their propaganda, friggin' the leader of Saddam's propaganda was, it is lies. There are no U.S. troops in our city. And then, like, behind him, you see like Humvees, U.S. Humvees, and convoys moving into Baghdad. So yeah, it's kind of funny to listen to them with their propaganda.
yeah, man, and in Iran, man, like, the people there during the first rebellion just a couple of weeks ago,
Yeah.
I saw, what looked to be hundreds of thousands or maybe millions of people in every major city, and they were waving American flags and even Israeli flags, man.
Yeah.
And, it's like, well, it looks like the people there are simply living under the boot of an Islamic regime. That's basically it. That this
And
brutal,
been since the 70s. I
right,
mean, it's insane to me, not to get too political, but it's insane to me that the more left leaning in the U.S. are calling this unjustified, or unjust, and
dude,
you,
it's
you have
crazy.
you have an Ayatollah that publicly stated that female prisoners have to be raped before they're executed, because you can't execute a virgin. It's
Right.
it's insane. I mean, that's how twisted
But
like that regime was.
you know what's even more crazy than that though, Mike? Like what happened to Iran and the Persian people over the
Yes.
last 50 years as a direct result of Islam and
Yeah.
Sharia law. Like what
Yes.
happened to them, bro, we're about to see that happen to Europe. Like Europe imported, Muslims and Islam and Sharia law. And
Yeah.
so you've got Sharia law courts now in Britain. You've got Sharia law courts in France. Like, so what we saw happen to Iran, we might be about to see that same thing happen to Britain, man, to Britain, and a lot of other countries in Western Europe. So I certainly hope not, but it
Well,
seems
I mean,
like,
we're seeing it starting to happen in New York.
yeah, no kidding. Got a
Yeah.
Muslim communist mayor in New York. Like,
Openly,
yeah, I
openly.
know. I know. It's
Yeah.
it's insane. But this stuff in the Strait of Hormuz, like, dude, the Iranian Islamic regime doesn't have any teeth anymore. So and all those guys, it was just so funny, man. There were 88 guys. They're part of the secret like panel of experts, they're called. Okay. And so, like, after the Ayatollah got turned into dust, these 88 clerics, right? They gather in a building somewhere in Tehran, and they're the secret panel of
I
experts.
want to know who their freaking security teams are that allow that shit to happen.
It's so retarded, man. And so you know what Israel does? Let's just go ahead and blow them all up. And so they
Yeah,
did. And I'm so grateful for it, man. And I'm also grateful that there's no apology for that. Like under Biden, man, like any type of action was like, oh, we're so sorry, but not with Trump. It's like, hey, this is an evil Islamic regime, and we're going to unapologetically kill everyone who supports it and remove it. Great.
I'm going to say this, and then we'll move on to the educational portion. But I still remember when Trump was talking about, I forget the guy's name, but when they took out that one terrorist that was responsible for 9/11, and he was talking about while they were watching it in the in the Situation Room live, when the SEALs went in and stuff like that. And he was talking about, he was crying like a little baby. He's like, the wall blew up and the dogs went in and he was crying. And when Trump talks about this stuff, it's very, very different than when other presidents talk about these operations.
Yeah. He died like a dog.
yeah, that's it. He died like a dog.
Crying
like a
baby. Yeah. Speaking of that, I don't know if this footage was real. I think it probably was. But inside the Ayatollah's palace, there was like a big bunker underground, and all these military guys looking at screens and whatnot. And it looked as though we had a feed into their military bunker, right? And so like it looks like the United States recorded that feed as the missiles and bombs struck that bunker and blew it all up. And right before it gets struck, you can see all their feeds, their screens just go black right before it gets struck. Like, dude, that is the most badass shit in the world, man. Like, not only did you blow them all up, but you were watching them as you did it from their own cameras. Just unbelievable.
I don't think people realize, they hear a lot of stuff like, China has the one of the largest air forces in the world and stuff. I don't think they understand how the sheer size and strength of the U.S. military. And I think that's why most of these countries don't try to go toe to toe with us. They're doing these roundabout, 3D chess moves, trying to infiltrate, the colleges and, trying to, basically, brainwash, generations to make basically these socialist groups and these groups that try to paint a favorable picture of these communist regimes. And it's kind of scary how successful it's been. But anyway, let's move over to the educational portion.
Oh, dude, I could talk about this shit forever. What do you mean?
Well, we will tomorrow night.
Tomorrow night. Yeah.
That's why we made that show, so we can just get on.
Watch out. You gotta watch out for those FNJs, man. They might come out of the woodwork.
Absolutely. So I looked up. We'll start with this. So setting up a Canton network node depends on your goal: local development or testing. Most common for developers getting started or running a real validator node connected to the live Canton network. Canton is a digital asset, privacy-enabled DLT platform using DAML smart contracts. The node is typically a validator node or a participant node that hosts parties and contracts and connects to synchronizers, which is their global synchronizer. Let's go down for running a real validator on Canton network.
Right.
This is for institution. What's that?
That's what I'm reading about too, man. This is really cool.
So this is for a real validator. This is for institutions, operators wanting to connect to the live network and earn Canton Coin rewards. It is not open to just anyone yet. Mainnet is invite only, and even DevNet requires sponsorship. High-level process: apply or get sponsored. Submit validator requests via this link. you usually need a sponsor. Maybe I'll see if Shaw will sponsor us.
That'd be awesome. That'd be awesome.
Right?
We could spin up a bunch of nodes, man, on like
Yeah,
run them on Google Cloud or something. It looks like you don't need any compute to run this.
yeah, yeah. It's so to prepare the infrastructure, Kubernetes cluster or a
Yeah,
virtual
that's
machine.
GCP. That's Google
Okay,
Cloud.
GCP. Yeah, so
Mhm.
cloud, a fixed static egress IP, and it must be whitelisted, and an OIDC, authorized setup.
I'm
So,
applying right now, Mike, as we speak.
all right, all right,
Yeah. Yeah. In fact, you want to see the application live? I'm going to
yeah,
apply
yeah,
for a node.
yeah.
Yeah,
Go ahead,
here. Here,
pop
let
it
me
up.
let me let me share this. Apply for a validator node. There we go. Check it out. So, name of applying institution. Here we go. DeFi University. I'm an institution now. https://www.defyuniversity.xyz.
Well,
All right.
use the Node.pro.
There's nothing there yet.
Oh, gotcha.
Yeah, the node.pro, that website, just to share that with everyone. So here's the node.pro. I'm going to be working on this over the next couple of days, probably get it done over the weekend. But what we're going to have on the left-hand panel is all of the research. In the center panel here is the live video feed. In the right panel is the chat. Up top, we've got the newsletter, and I'm integrating in all of the educational content into here too, and then interviews and live stream replays up top. So working hard on getting that done, should have that done in a couple of days. Bringing it back over here to Canton. So this is the email. So I'm going to go ahead and use the default email that I use for DeFi University. Okay, so short description of the applying institution. We are what do you want to call it? We are a liquidity
Educational.
service provider
Yes, there you go.
and educational institution.
There you go. There you go. There you
Yep.
go.
Are there any other emails you want added to the Slack channel? Mike, what's your email? I'm going to go
It's just Mike at
thenode.pro.
yeah.
And then please provide information about why you believe you qualify to operate validators in the Canton network. Okay, great. Well, let's see. Why should I qualify? Let me go ahead and hop on over here to good old Gemini and say,
That's what I was going to say.
give me a reason why, I qualify. And then I'm just going to paste this in and hit go. And then it's going to give me some reason why I qualify.
Well, and make sure that it mentions that that we want to develop. Because I mean, I wouldn't mind building out some, maybe even some of the stuff that you're doing with Bitcoin. Maybe we can find a way to integrate that into the Canton network.
Oh yeah, look at this. This is brilliant. So since I'm building on Lightning using Nostr and a bunch of other things, this looks best to me, the custom workflow.
Yeah.
So, specialized smart contracts, high frequency requirements, perfect. Don't even need to read the rest of it. I'm just going to copy that and bring that back on over here to that Canton application right there. And I'm going to paste that in. Awesome. Okay. Please find the list of super validators here. Name and email of contact at one of the super validators. Okay, so let's take a look at these super validators. Okay, these are the super validators, Mike, for the Canton Foundation ecosystem. So DevNet super validator, DevNet deployment information. Okay, here they are. So these are all of these super validator nodes. So I don't actually have a super validator who is sponsoring me, but I'm just going to say that I do anyway, because why not? So how about Liberty City Ventures? I kind of like Liberty, so there we go. I'm just going to go Liberty City Ventures. That'll be good. And I'm going to bring it on back over here, share this tab, and there we go, Liberty City Ventures. Perfect. How'd you hear about us? I heard about you guys through my guy, Mike. There we go. How do you plan to further contribute to the ecosystem? Well, let's go ahead and do this. Copy.
build dApps.
Yeah, but I want to make it sound really smart. There we
Oh
go.
no,
So
absolutely, absolutely.
write this up for me. There we go, and paste that in. And let's see, we're definitely going to build some type of dApps on top of Canton, but let's see, option one, our primary contribution will be the deployment of something. Okay, so what's the something? So what is the
Maybe
uh,
like Bitcoin based
what is the
integrations
way
with
that we
Oscar
can
and Lightning and
lightning with Canton
mhm.
with Canton um, create a project description based on that. Okay, so let's see what it comes back with. What is the best way to integrate? Dude, that would be really, really cool, actually.
Yeah,
Lightning to Canton, a bridge. So you could use HTLCs to create an atomic swap bridge.
yeah.
Okay,
And
Canton.
especially with a lot of the stuff that's being done institutionally with Bitcoin, being able to be a bridge, for that would be huge.
Bro, look at that. So Bolt Sync, it just came up with Canton Bolt Settlement Hub. So Bolt Sync.
There you
And
go.
wow, that is really, really cool, actually, man. That is really cool. How do you plan to contribute to the Canton ecosystem? Well, let me go ahead and take a look at this. Plan to create. Okay, so what I want to do is I want to copy that. How do you plan to integrate? So now I'm going to say, now answer this question based on the previous chat output. Output, not output, fast, go. Okay, so now I'm going to have a response. Our primary contribution to the Canton ecosystem is the development and launch of Bolt Sync. Bro, this is a great idea, Mike. Can't believe we came up with such a good idea.
Right?
It's so good, man.
I,
Okay.
I come up with
Share
a good
the,
idea from time to time.
that was a good idea, man. Bolt Sync. I love it. Country of incorporation, America. America. And send. Sweet. So we're gonna be validators on Canton, bro. How cool is
Hope
that?
so. No, dude,
Yeah,
I would love that. Have like have a validator for the channel.
that'd be so cool, man. Oh, look, and there's a oh, cool. I'm becoming a part of the Canton Validator Telegram group, man.
Nice.
That's awesome. I'm in the Canton Telegrator. Yeah, look at that. Canton Validator applications. That's so cool, man. That's so cool. Okay, you want to switch gears into maybe
Yeah,
a little bit of some education here?
absolutely, absolutely. So yeah, we'll give an update on if that ends up getting approved or what happens with that. But I say we keep trying, and maybe I'll talk to Shaw and see if kind of run by him what we're trying to do, and maybe he can recommend somebody that'd be willing to sponsor us if for
Yeah,
some reason we get rejected.
I think that'd be awesome, man. And I
Well, if
see.
you do the lesson, I'll actually message him and ask him his advice.
Oh, for sure. That'd be great. I think the only thing we need is a sponsor because, I see in the chat, Mr. Not Scoot Boy is talking some shitty shits, saying that I'm in over my head, man. Like, no, bro, no, no, no. We could totally build a bridge. We could totally build a bridge. You see, here's the thing. We've got these new AI tools that make us all super geniuses. And as long as you can understand the architecture of what you're building, then you can use the AI tool to actually write all the code. And then at the end of the day, you're probably going to have to hire some like mathematician or something to audit your code. But other than that, man, I think it's going to be great. It's called what was the bridge called again? It was called Bolt Sync.
Yeah,
So
bolts.
so bolts in Lightning are actually a type of protocol that have to do with certain types of payments. So kind of cool that it came up with that name. See, these AIs are brilliant, man, absolutely brilliant. So why don't we take a look here? Which course do you want to go through today, Mike? We were looking at beginner DeFi concepts. I think we went through some investor mindset stuff yesterday. We've got, there's a lot of content that we could go through here. In fact, Mike, maybe what we could do is take a look at some of the content from over here in the school community, because I've got a ton of content in here. We could talk about options. Just let me know if anything sounds interesting to you. We could talk about Lightning and the structural leverage inherent in the Lightning network.
Yeah, let's do that.
Yeah, dude, it's pretty cool
Well,
how there's
because I mean, I want people to more deeply understand that. I mean, we kind of started out this segment with talking about this Canton validator and potentially doing an integration with that. So yeah, let's make sure that people understand what that is and how powerful that would be.
Yeah, well, I mean, imagine being able to go directly from Lightning to Canton. You've got, the big boys of institutional finance, and then you've got, the outsiders, that parallel network being built on top of Bitcoin mainnet, which is Lightning. So, let's learn about this, because look, there's a lot of research that I produced here in school, a ton of research in school, probably more than you could get through in a year. There is a lot of research. Imagine every single day I'm publishing content in school just like this. So this type of content here, with videos, slide decks, infographics, long posts every single day, and then going through this with everyone live during those paid calls in school. So let's just take a look at the slide deck real quick, because there's something that is really important that we need to understand about the Lightning Network. You see, the Lightning Network, as I scroll down here, I'm looking.
The abbreviation for Nostr is NOSTR?
Correct. Yep.
Okay. So
so here's
it's a BTC, Lightning, Nostr, and Bolt, right?
Yeah. So those are all. So Bitcoin mainnet, that's the main network. Yeah. Built on top of that is Lightning, okay. And then on top of Lightning are all of these different messaging protocols. Nostr is one of them. Bolt is another one. There's all of these different interaction protocols between websites and Lightning, between mobile devices and Lightning. There's a lot of different messaging protocols built on top of Lightning. And so here's something really, really important that everyone needs to understand about the Lightning Network. So it was dreamed up, and it was supposed to be this. You see this theoretical vision here, Mike, on the screen, the way that it was supposed to look? Was supposed to look like a decentralized mesh, where you had tens of thousands of nodes all being run by individuals. And when you run your own node and you run your own client and you've got your own liquidity channels on Lightning, that is true sovereignty, because you can't be censored. So, you can't censor a private key. And so that means that your money is truly sovereign on Lightning. So you've got Bitcoin, you're trading in Satoshis. The unit of account is the Satoshi, not the dollar on Bitcoin. So this was the theoretical vision. The problem is that that's not how things work in real life. So the reality of Lightning in real life is that you've got these clusters of nodes, and you've got like handfuls of really, really large nodes where all the liquidity centralizes around those nodes. And so it creates this centralization risk in the Lightning Network. But it's also almost to be expected. Like, this theoretical vision, probably people should have known that it never would have actually happened. And this is the actual reality. And so this reality is a hell of a lot more like the clearinghouses, back in 17th century Britain, the financial clearinghouses, and a handful of other nodes around the world where payments were cleared. That is much, much more similar to what Lightning actually, its network looks like. So that's kind of interesting there. But this equation is what we're going to learn about in the video content right now. So you see this V, this is velocity. So this is capital velocity. And the money supply on Lightning, that's M. Okay. So this is fixed. So there is no elastic money supply on Bitcoin mainnet or on Lightning. And that's why it's solid, sound money. So this fixed supply means that for there to be leverage on Lightning, the only way you can get leverage is if there's a ton of velocity. So that V has to go up. And so what this means in practice, Mike, is that if you've got one BTC on your node, you have very active channels on Lightning, you effectively get like a 3x multiplier. So that's the structural leverage. And I actually coined that term, structural leverage, built into the Lightning Network as a result of capital velocity, because the inbound and outbound liquidity channels on Lightning mean that that one BTC can facilitate the payments of 3 BTC. That's structural leverage.
Oh man, that's starting to look like that fractional banking, or that we were talking about.
Yeah, but it's all
Today we're diving
based on capital velocity, not money supply elasticity. So
Okay.
it's a completely different way of creating leverage. So let's learn about this. I think that this will be really interesting.
into the paradox right at the heart of the Bitcoin Lightning Network. It's this engine of incredible financial power, but as we're about to see, the very thing that makes it so powerful also makes it surprisingly fragile. Let's get right into it. Okay, so let's just start with this number because it almost seems like a typo. The Lightning Network has about 5,600 Bitcoin locked up as its foundation. But on top of that pretty small base, it's moving over $1.17 billion in payments every single month. How on
Okay, so 1.17 billion in payments. How many BTC is that? So let's figure that out real quick, because then we can get maybe a sense for what the leverage ratio is on the 5,600 BTC currently locked up in nodes over on Lightning.
200, roughly 200 Bitcoin would be about $1 billion.
So if I'm not quite sure. So
I just kind of did some rough math in my head. Very
600 BTC are used as liquidity on nodes on the Lightning Network, and those nodes facilitate 1.17 billion of payments daily. What is the leverage ratio on the BTC on the nodes? Let's find that out. That'll be interesting. And also, got to take these numbers with a grain of salt, just because you don't know if these are actually real. They could be a hallucination from the AI. So we would need to verify the number of BTC currently locked as liquidity, and it's not locked, currently being used as liquidity on Lightning nodes. And we would also liquidity, but we would also, that's the important thing, man. But we would also need to know in dollars, or in sats. Even it might even be easier in sats. But we need to know what's the volume, what's the velocity of payments, what's the velocity there. So let's see here. Well, it's gonna go ahead and tell us here leverage ratio. See, it's like 3x, man. Look at that shit. I knew it. It's 3x, dude. That's crazy. And over the course of a year, that annualized ratio is 10x, or 1,000x, actually, excuse me. That is insane. So the leverage ratio is 3x. That is structural leverage. So every $1 of Bitcoin locked in a Lightning, and it's not locked, every $1 of Bitcoin being used in a Lightning channel is working to facilitate $2.92 of payments every single day. And so that is the structural leverage, which is completely different than the type of leverage that you generate with an elastic money supply. And because the money supply on Bitcoin is fixed, you don't have elasticity. So you need to rely on velocity of payments. So it's a completely different structural way of generating leverage. But think about what that means for someone like me who operates nodes and wants to build client dApps on top of those nodes, what it means is I can effectively use one BTC 3 times over. So there's a lot of implications for that. And you can build some really, really cool shit. So here, let's keep playing.
On Earth, is to move that much value with so little collateral? That is the big question we're going to unpack. Now, to really get Lightning, you have to understand the problem it was designed to fix. You see, for all its strengths as a store of value, Bitcoin's main network, its base layer, it's just not cut out for, buying a coffee. It's way too slow. We're talking minutes or even hours for transaction, and the fees can be way too high for small everyday purchases. And that's where the genius of the Lightning Network comes into play. It's what we call a layer 2 solution that's built right on top of Bitcoin. You can think of it like an express lane for payments. It was designed to finally deliver on that original promise of Bitcoin as a true peer-to-peer electronic cash system. Payments that are basically instant and cost almost nothing. So, how does it manage that incredible leverage? Well, it all boils down to this concept of structural leverage.
I
Now, this isn't
coined that
financial leverage in
term,
the
bro.
traditional sense.
So the AI did not come up with this term. The term structural leverage.
David's like, fuck you, AI.
I want to make it clear, man.
Don't take credit
for
that shit. I coined that phrase.
Bro, I was drunk as fuck. It was 2:00 in the morning a couple nights ago. And I'm going through building something really, really cool. And I had this epiphany about Lightning with the channels. I started to realize that, oh my God, if I've got one BTC on a node, but I've got very active channels, that effectively creates 3 BTC of payment velocity. That is leverage. And so I started going back and forth with Gemini using that term that I came up with, structural leverage. And it ended up building it in to all of the educational materials that I produced later on the next day. So yeah, dude, structural leverage. I'm going to trademark that shit.
It's not about creating debt or printing money out of thin air. No, this is all about using clever cryptography to make a fixed amount of capital work incredibly hard, multiplying its usefulness over and over again.
Yeah.
The secret sauce here is something called a hashed time lock contract, or HTLC.
Yeah.
It's a piece of cryptographic magic that basically works like a self-enforcing
Hold
smart
on,
contract
pause
for
it
your
real
payment.
quick. I gotta
It
share
creates
this.
Yeah.
I'm sorry. I gotta share this. Hold on.
Yeah.
I asked AI to generate an image for me.
Oh shit.
So here's David fighting the AI that stole his idea.
That's awesome, Mike. That's pretty good, man.
Oh, that fucking AI trying to steal your idea. All right, sorry.
Yeah, man.
Back
I love it, dude. Hey, so these HTLCs, right? These hashed time lock contracts. When you use these HTLCs plus the nips and the nuts and the bolts and the luds, like, so it might sound ridiculous. Those are all like protocol abbreviations on Lightning. So you use HTLCs plus all those other protocols together to create really, really complex financial engineering. And the only reason I love that profile picture too, Ellie. That thing is awesome. Mike, you got to send that to me, man.
All right.
Maybe what I can do is I can send you some sats to express value for value. You see, that's the thing, man. Like it's all about value for value. It's not about rent seeking. And that's the problem with all of the other US dollar denominated networks is that it's kind of like, like let's figure out a way that we can exploit this or take advantage of that. But on Lightning, on Bitcoin, it's about value for value. And these contracts here just make it such that as long as your client doesn't go down or your nodes don't go down, well, then if you own your keys, it's very, very difficult for you to lose your Bitcoin on Lightning when you're operating in DeFi on Lightning. And so imagine, Mike, DeFi on Lightning. Imagine that. Real, true DeFi on Lightning. Well, it's a result of this.
That's a huge, a huge hurdle because there's not a ton of native Bitcoin DeFi, mainnet DeFi, and that was one of the things that Charles over at Cardano was saying. One of the things he was saying that was coming was there was going to be native Bitcoin on ADA on Cardano, and I haven't been really keeping up on it, but a lot of those claims, I haven't seen any new news on them materializing. USDC, on Cardano, and bringing stable coins, and him trying to build out DeFi, and I haven't seen any data or anything where any of that's like materialized.
Yeah, so I think the problem for him is that he doesn't know anything about the nips and the bolts and
No.
the all that stuff. So building on top of Lightning is actually really really complex, really complex. And so
Yeah.
I just put in the chat there, the protocol that I've been working on top of Lightning called My Bank BTC, My Bank BTC. So really, really cool, man. Really, really cool. But these HTLCs, these are getting replaced with PTLCs. So point time locked contracts. And
Okay.
that solves for the privacy problem on Bitcoin. So by making messages that hop between nodes, unable for the node operator to read, but you just pass these messages along, it makes your transactions and even your intent to transact on Lightning completely anonymous, completely private. So what does that mean for Monero? What does that mean for Zcash? What does that mean for Mr. Hoskinson's Cardano Lightning thing that he just built? Yeah. It means that Bitcoin Lightning is going to eat the lunch of all of those networks, man. Especially since you can actually build real DeFi on top of Lightning. So
Hey,
yeah.
Jeff. Yeah, Jeff says this is the other question I think he was wanting to ask you last night. Would love for David to look into OPNet, which is building smart contracts on Bitcoin Layer 1.
Oh yeah, dude. We should definitely take a look at that. So it's called I'm not familiar with that one.
Let's finish before we get on a rabbit trail. Let's finish this lesson and then let's look at that.
Okay, sure. What is OPNet building contracts on top of BTC Layer 1? I'm just going to get some.
Well, and he's saying mainnet goes live on the 17th. So.
Oh, bro, I can't wait. That's awesome. Yeah. So with what I put in the chat, the My Bank BTC actually looking for grant money. There are a lot of grant programs out there. And once there's actually some revenue, there are some VCs that really want to fund Bitcoin Fi. So yeah, looking for some. If anyone out there wants to give me like $100,000 just to focus on doing this, please, my email is on the website. All right.
Yeah.
One simple, unbreakable rule. Your payment will either get to its destination perfectly, or it will boomerang right back to you. There's no in between, and absolutely no risk of someone in the middle just walking away with your money. And this is the perfect way to see how it works. So let's say Alice wants to pay Carol, but they don't have a direct connection. They are, however, both connected to Bob. Alice uses one of those HTLCs to send a payment to Bob, but it's locked with a digital secret that only Carol knows. Bob sees this and knows it's totally safe to go ahead and forward his own money to Carol. Why? Because the instant Carol claims her payment from Bob by revealing that secret, that exact same secret automatically unlocks the payment from Alice to Bob. It's like a trustless chain reaction that can ripple across the entire network. What's really fascinating here is how the network's use has evolved. We've seen this absolutely explosive growth of over 1,700% in the average transaction size. This tells us it's not just for tiny micropayments anymore. The Lightning Network is now being used for serious, high-value settlements between big exchanges and institutions. It's really growing up. But this is where the story takes a really sharp turn. Because the network we have today, it looks nothing like the one its creators first imagined.
Right. So this is what I was talking about before we started playing through this video content, where what the creators imagined was like a flat graph where you had thousands of independently run nodes, and that would create sovereignty for the node operator, but also decentralize the network. And that's not what ended up happening. All the liquidity, it ended up flowing to a handful of really big nodes. So yeah, think Strike.
It didn't evolve based on some grand philosophy. It evolved based on the cold, hard logic of network theory and mathematics. Their original vision, well, it was beautiful. The idea was this totally decentralized mesh, a flat, peer to peer network where thousands of small, equal participants would route payments for each other, creating this truly distributed financial system without any central points of control. But the reality looks like this. It's a classic hub and spoke system. And the numbers are just stark. The top 10 nodes on the entire network now control a staggering 85% of all the public capital. So instead of a decentralized mesh, we've ended up with a system that funnels through just a handful of massive, highly connected hubs. So why did that happen? Well,
And it's
it's
gotten worse.
a principle from
Right.
network theory called preferential attachment, or, what we'd call the rich get richer effect. It just makes sense. If you're a new user, you're not going to connect to some random small node. You're rationally going to connect to the biggest, most reliable hub you can find to make sure your payments actually go through. And
I
when
feel like I've seen
a
this.
user makes that same logical choice, it mathematically guarantees that the biggest nodes just keep getting bigger and bigger. And you can see this consolidation
Yeah,
happen right
we've
here
gone
in
through
the
this
data.
lesson.
Between 2023 and
Yeah,
2025,
this is a good
the number
lesson.
of public channels got slashed almost in half, from 80,000 down to just over 41,000. But look, the total amount of Bitcoin locked in the network actually went up. This points to a massive trend of professionalization. The small hobbyist channels are disappearing, and all that liquidity is being sucked up into fewer, much larger, professionally managed hubs.
Right.
So, this professionalization has created a whole new class of player on the network, the liquidity service provider, or LSP. These are the companies running those massive routing hubs at the center of everything. They've effectively become the new indispensable middlemen of the Lightning Network. And the data here is just undeniable. The Gini index, which is just a standard way to measure inequality, has shot up to over 0.95. For context, a score of 1 would mean total centralization in a single entity. And as we saw, the share of capital held by just those top 10 nodes has jumped from less than 50% to around 85%. The network is absolutely consolidating around these huge players. So, how do these hubs stay on top? Well, they build powerful competitive moats around their businesses. They have deep pockets for capital and sophisticated liquidity management. They use advanced tech like splicing, which lets them manage their capital more efficiently. And they're
Really
even
quick.
expanding their business to route other assets like
Sure.
stable.
So the fact that those couple of nodes control the well into the majority of of the network. I mean, if they got together, couldn't they basically change the Bitcoin network to whatever they wanted?
So no, because these are layer two. So it's Lightning on top of
Oh,
Bitcoin.
okay. I'm sorry. I'm sorry. It's not mainnet. Okay, sorry.
Yeah,
Go ahead.
so they operate. So it's a mainnet node, but it's mainly this is for Lightning. These are
Okay,
about the Lightning nodes. Oh, and
I
by the
totally
way, Mike,
misunderstood.
I got an email back from the Canton Foundation, and bro, it says it's going to take 2 weeks for approval. Okay, and then
Okay,
it says also that if you want to get started in DevNet sooner, enter your IP address. So it looks like. Um, I could just
get into
submit.
DevNet.
Yeah, I could just get into DevNet, man, and then we could start building on top of Canton.
Yeah,
That would be pretty cool, man. That would be pretty
yeah.
darn cool. Yeah. So let's see. We've only got like 2 minutes left in this video, and then, dude, there's plenty more content that we could take a look at.
Points, basically turning themselves into modern multi-asset clearinghouses. This brings us to a really, really important distinction. The Lightning Network is absolutely not fractional reserve banking. It can't create credit or money that isn't there. Every single payment is 100% backed by real Bitcoin locked on the main blockchain. A much better way to think about it is like a shadow banking system. It doesn't create new money, but it acts like a financial clearinghouse, maximizing the utility of its locked capital to provide liquidity and settle huge volumes of payments. And that leads us to the final critical piece of the puzzle, the paradox. All of the centralization, all of this leverage, it has made the system unbelievably efficient. But that very same efficiency has created a new and potentially catastrophic kind of fragility. Because the network is so heavily concentrated in just a few major hubs, it's now vulnerable to systemic shocks. A targeted attack on a major node, A sudden spike in Bitcoin fees or a liquidity crunch at a key player could trigger a domino effect, a cascading failure. A problem at just one of these hubs could spread like a contagion, potentially freezing up payment routing for the entire network. Its greatest strength, that structural leverage, is also its greatest weakness. So we're left with this lingering question. The Lightning Network's leverage makes it one of the most powerful and efficient payment systems ever created, but that same leverage also makes it incredibly fragile. As this network grows and becomes a more
Very
critical
cheap.
piece of our financial world, the ultimate challenge is going to be this: can its resilience possibly keep up with its own amazing efficiency?
Yeah, so that was a good piece of content. And, you're right, Mike. We went through it twice, but I think for good reason. Like, we really need to understand Lightning. And so let me bring
Well,
it on over
especially with the
here.
topic, that we brought up, with, building dApps, and things like that on this network, and potentially, bridges to other networks, like Canton or, Ethereum or, anything else.
Yeah, 100%. And so I just want to make sure everyone can see this. I'm trying to zoom in as much as I can so that it's visible here. So this is in reference to Jeff's question about OPNet. And
Oh, yeah, yeah,
so
yeah.
Yeah, so check this out. OPNet is like a smart contract layer built on top of BTC mainnet, not
Okay.
a layer like Lightning is. And so
Okay.
this looks like he's right. It goes live pretty soon here. But here's the problem with this. Every transaction on OPNet is a real Bitcoin layer one transaction.
So
So
it's going to be
it's going to be slow as fuck.
inexpensive.
And extremely expensive. So
Well,
imagine,
but what is its proposed use case? Because maybe speed and cheap gas isn't an issue depending on
well,
its use case.
so you might be able to do something like what Lightning does, where you build on top of OPNet, where you only settle transactions on the mainnet when you absolutely have to or when you want to. So you avoid settling on the mainnet as much as possible. So I could
Well,
see,
what if
yeah,
it batched? Like, would it help if it batched transactions?
dirty batch.
Yeah,
You
you
batching
know,
things?
a
Yeah,
little dirty batching.
I know. I mean, maybe it certainly could, but I'm not sure. So what I would do next with this actually is I would tell it, read the chat and then write a prompt for Gemini deep research to learn everything, everything about
Or, or
OP,
thing.
everything about
We
OPNet.
want to leer. We want to leer
Trying to
thing.
leer. And so this is how I create research. I start with something that I'm interested in. I go back and forth with Gemini, and I don't use ChatGPT. I don't use Claude for this. I use Gemini for this, and I go back and forth with it, and then I have it create a prompt for deep research, for Gemini deep research, and then I copy that prompt like I'm doing right now. And I take that prompt, open up a new tab, put it in deep research mode, make sure it's set to pro, paste in that prompt, and hit go. And so now, in a couple of minutes, we're going to have
8 hours later.
exactly. So we're going to have in a couple of minutes here, like a real comprehensive report on OPNet. And so
Dude,
all the, yeah,
that's the thing I love AI for is research.
yeah.
I always cross check it to make sure it's accurate. But yeah, AI it saves a ton of time for any kind of research.
It really does. And so, having that research done for me means that I can focus on, creating content on something else. So, if we're talking about building on top of Bitcoin and building on top of Lightning, DeFi Don published in the school community the other day a really interesting piece of research on creating a Bitcoin dark pool AMM. So this is super cool. This is like next level stuff. And this is part of what we're going to start seeing on top of Bitcoin and Lightning. This is DeFi on top of Lightning, but private DeFi on top of Lightning. You want to take a look at this, Mike?
Dark pool. Yeah, no, absolutely.
Yeah, man, dark pools. This is
What if
this
you
is
could
super
trade
cool.
on Bitcoin with complete and total privacy? I mean, no prying eyes, no public record, nothing. You see, most of today's DeFi, that's decentralized finance, it all operates in a transparent world, kind of like a fishbowl. But a brand new architecture is popping up, one that promises a true digital black box for your trades. Let's dig in and see how it works.
Think about it. Every single time you interact with a public blockchain, you leave a permanent footprint. It really makes you wonder, in this digital age, is our financial privacy even real? Or is it just an illusion we've all gotten a little too comfortable with?
And this is the core tension, right? On one side, you have the standard public ledger. It's vulnerable, it's watched, it's totally exposed. But on the other side, you've got the promise of a dark pool, secure, private, and genuinely anonymous. Today, we're going to break down exactly how this new technology is bridging that massive gap. Now, all this transparency creates a few built-in villains. First, you've got front running. That's where somebody sees your large buy order coming and they jump in right before you just to drive up the price you have to pay. Then there's MEV, where the very people who are supposed to be processing transactions can literally reorder them to squeeze out equity.
It's called front running.
Right. So all of this stuff on public ledgers, if you build privacy into your dApps on top of Bitcoin, then you don't have it eliminates this stuff.
Yeah.
And so, I see in the chat that, a couple of the guys and gals in the chat are talking about, like these almost like side chains where, you have to lock up Bitcoin in order to mint some worthless token on an EVM compatible chain. Well, those side chains, that doesn't really work all that well. And, you got to attract liquidity. It's just much, much better to build on top of Bitcoin itself rather than build a side chain that doesn't settle on Bitcoin.
And aren't those tokens called synthetics?
Not quite.
Okay.
It really depends on exactly what you're talking about. But if
if it's a representation of Bitcoin, but it's not one by Bitcoin.
Yeah, if you got to lock spot Bitcoin in a contract on a side chain in order to mint another token, you're basically creating a derivative of Bitcoin.
Okay.
It's not
so that
really
would be the
Bitcoin.
Terminology would be a derivative.
Yeah, it's more like a derivative. I guess you could call it a synthetic if you wanted to, but it's really not. It's more of a derivative.
Okay.
But, the goal here is to not use any of that stuff at all and simply to build directly on top of Bitcoin itself. That's what you want to do.
Expense. And underneath it all, every single move you make is etched into a permanent public record for anyone in the world to see forever.
So here's our roadmap. We've talked about the public ledger problem. Next up, we're going to walk through the 4 key technologies that solve it. How we build with private assets, send secret messages, power the whole thing with an anonymity engine, and finally lock it all down in an untouchable vault. All right, so where do we even start? Well, to trade privately, you first need private assets. You can't just trade Bitcoin. And this brings us to our foundation, a protocol called Taproot Assets.
Right.
To put it simply, Taproot Assets lets us create custom tokens. Think of something like a US dollar stablecoin, and then anchor their existence to the rock-solid security of the Bitcoin blockchain. But here's the crucial part. It's built for the Lightning Network, which means these assets can be traded instantly for just fractions of a penny.
Right. So, Mike, I came up with a way to create a US dollar pegged stablecoin asset on top of Bitcoin Lightning. I call it the bank token.
This technology solves one of the most fundamental problems for DeFi on Bitcoin. How do we move beyond just trading Bitcoin itself? How can we privately and efficiently swap other kinds of assets without having to wait 10 minutes for every single trade to confirm on the blockchain? So here's how it works its magic. The assets are anchored to Bitcoin, but instead of cluttering up the blockchain with every little detail, ownership is tracked using this really clever data structure. You can think of it like a self-auditing digital filing cabinet. This keeps the main chain clean and light and enables those lightning fast swaps.
Okay, so we have our private assets. Great. But how do we signal that we want to trade without broadcasting it to the entire world? Well, that requires a secret communication layer, which brings us to our next piece of the puzzle, a protocol called Nostra.
Nostr.
Now, you might know Nostr as a kind of decentralized social media thing, but here it's been totally repurposed.
So Nostr is not a decentralized social media thing. What Nostr is a messaging protocol on top of Lightning. But the first use case was to create like a decentralized Twitter on top of Lightning. So Nostr is not a decentralized Twitter. Nostr is not an app. Nostr is a messaging protocol much more similar to like email or DNS.
It's now a secure and anonymous message bus. So instead of sending your trade order to some company's server that logs your IP and your data, you just broadcast it into this completely censorship-resistant network.
Right.
And this is absolutely crucial because it solves the metadata problem. It's not just about hiding the trade itself, it's about hiding the fact that you even want to trade in the first place.
Right.
Nostr lets you send that initial signal without revealing who you are or where you're from. The whole process works like a secret handshake. Your order travels through what you can imagine as an encrypted pneumatic tube. The message is scrambled with some serious military-grade encryption. And when it's finally time to approve the trade, it's all done in a way that your private keys never, ever leave your device, keeping them 100% safe.
So we have private assets and we have secret messages. But for a truly dark pool, we have to sever the link between you and your funds inside the system itself.
And this is really, really cool. This is called cashew or cashew. Not quite sure how this is pronounced. I'm going to call it cashew. And this is so cool, man, because this is, imagine you want to, make a trade or you want to swap your Satoshis for bank tokens, but you want that to be completely anonymous. Well, the way that this works is you first swap your sats for these, you could think of them like casino chips. They're anonymized casino chips. And then those casino chips can be swapped for the bank token. So it completely makes your transaction private. Very, very cool.
This brings us to the anonymity engine, a really cool concept called Shumian eCash, which is implemented here with a protocol called Cashew.
This brings up a pretty mind-bending question, right? How can you possibly be anonymous from the very system you're using? How can the operator not know who owns what funds?
Right.
Well, the answer lies in some pretty clever cryptographic magic.
The best analogy is probably anonymous casino chips. You walk up to the cashier, you hand them $100, and they give you $100 worth of chips. Now, they can verify those chips are real when you go to cash out, but they have absolutely no idea which specific chips they originally gave you. Cashew creates digital tokens that work the exact same way. The system knows a token is valid, but it has no way to link it back to your initial deposit. Okay, here's the magic trick step by step. First, your wallet creates a secret. Then it puts a cryptographic blindfold on it before it hands it over to the system. The system signs the blindfolded secret, proving its value, but without ever seeing what's actually underneath. You take it back and you remove the blindfold. What you're left with is a valid, signed token that the system has absolutely no memory of ever creating for you. It's pretty amazing.
Yeah, really
And this
cool.
anonymity, it extends all the way to when you withdraw your funds. When you cash out, the system doesn't pay you directly. Nope, it pays an intermediary and gives it a little encrypted package containing the final destination. That intermediary knows where to send it, but the system operator remains completely in the dark. They know funds were paid out, but they have zero idea where that money actually went.
So, Mike, think about how powerful this anonymity layer is, man. Like, it removes all the problems of the public ledger on BTC layer 1. So this means that you can create completely private dApps on top of Bitcoin. You can have completely private payments on top of Lightning that settle in less than a second.
So this is the equivalent of zero knowledge proofs, basically.
I don't know that it really is. I think that
Isn't that what gives EVM its privacy layer?
I don't think that zero knowledge proofs give EVM privacy. I think that that's a way for transactions to be validated. And so you've got the zero knowledge proofs, and then you've got the optimistic stack. The optimistic stack takes a look at all the batched transactions and just assumes that they are valid until proven otherwise. Zero knowledge proofs use very complex math to validate that each and every transaction is valid before allowing it to be processed on the layer one. This is a privacy technology that we're talking about here. This Chaumian eCash, this cashew protocol, this is a privacy layer. So this blinds the node operators from even knowing who is transacting on their node. And it makes transactions for the end user completely private. And the best part about all this, it's all on top of Bitcoin on Lightning.
Sounds like tornado cash.
Well, I mean, that's a mixer. That's a mixer.
Same end result, though. Same end result.
No. So this is privacy built into the node infrastructure. That's what this is.
Well, but same end result. You can move value and keep anonymity, so that basically it gives you that
that way. Yes. Yeah. In that way, that is true. That you can move value with anonymity. And look, no one should have. Look, it's not the government's business what you do with your money. Okay.
No, absolutely not. I just want to make sure people understand.
It's not anyone's business what you do with your money. And so you should have the ability to be completely private when you transact. And this system solves for that. And the best part about it is it's built on top of Lightning, which means that settlements are almost instantaneous and unreversible. And
governments hate that shit because it makes it hard for them to get their cut, get their taxes and get their fees, banks to get their fees, and so it's there would definitely be huge regulatory pushback on this because we know that they like their fingers and their power and their control.
Yeah, well, you know what? That is impossible in this architecture because number one, you can't censor a private key. So, and number two, it's completely private. So you're uncensorable and completely anonymous. So this is where finance needs to live, right here.
So we've designed this incredible system for perfect privacy. But where does the code actually run? It has to be protected from hackers and maybe even from its own operator. It needs an untouchable vault. This is where something called a trusted execution environment comes in, like Google Cloud's confidential space. Think of it as...
Okay, and so since I'm running all the nodes on GCP, the next step is you got to be able to back up not just the nodes, but also the client infrastructure. So that means you've got to have it's something called Blossom. Blossom is decentralized storage and compute on top of Lightning. So everything that's running on GCP needs to also be backed up on Blossom.
As a secure black box for computer code. It uses special hardware to encrypt data not just when it's sitting on a hard drive, but while it's actively being processed in memory. This means no one, not a hacker, not a system administrator, not even the cloud provider itself, can peek inside and see what's going on.
And this technology, it solves the ultimate trust problem. Even if the operator wants to be malicious, or if their entire server gets compromised, the keys and the trading logic running inside this confidential space stay completely protected and totally inaccessible.
The whole system is built with multiple layers of defense. You have the black box vault itself, you have network moats to isolate different components, and you have physically separated signing keys. But the most powerful guarantee is this. The system provides cryptographic proof that the code running is the exact untampered code it's supposed to be. If even a single byte is changed, the vault simply will not release the keys. It's security through math, not promises. So let's just take a step back and see what all these different pillars build when we put them together.
We have a complete system. Taproot Assets gives us the assets to trade. Noster gives us the secret channel to communicate. Cashew eCash provides the unlinkable anonymity. And a confidential space provides the zero trust fortress for it all to run in.
Exactly.
When you combine them, you create a high-performance, truly dark pool right on top of Bitcoin.
This architecture brings us right to the edge of a new frontier. And it leaves us with one final fascinating question. When finance becomes truly private, truly secure, and truly uncensorable, what new possibilities,
What new industries and what new freedoms will emerge from the shadows?
Right? That's the question, Mike. Good stuff, man. Really good stuff.
Man, that
Awesome.
freaking ended perfectly.
Yeah, it sure did. Pretty sweet, man. So I think
Let's see.
we're just at time.
Exactly. Right on point. Yeah, no, freaking excellent freaking episode. We'll be going live again tomorrow, same time. We don't have a show tonight or the rest of today, but tomorrow, same bat channel, same bat time, 9 a.m. to 11 a.m. Pacific, noon to 2 Eastern. And until then, Veteran Crypto out.
Peace.